You may be thinking about getting a Shopify loan, but please watch this before you do. And I get it, it's tempting. Shopify, they're not the only ones. Wayflyer also does one, but Shopify specifically, they're throwing around, hey, we'll give you 100 grand, 200 grand, $250,000, $500,000. All you gotta do is just sign this piece of paper and it'll be to you in 7 days. I get it, it's tempting. You're feeling the pinch or the crunch. You need help, you feel like you need cash. But let's go through some of the realities of what happens first. And I hope if you just be patient with me just for a little bit, I wanna walk you through really what's happening when you sign this loan. And the reason why I'm even making this is because I work with brands. I've worked over 300 brands in the last 6 years. My agency does. And I have seen over 10 brands get these loans. And I've seen countless brands get these loans. Every single time they do, they always run into the same issues. So I'm going to walk through the full details. I'm going to pull back the entire curtain. I'm going to show you a P&L, what it does to your P&L. I'm going to then talk through the different scenarios. I'm going to talk about some of the fine print that goes into these Shopify loans as well. And I'm going to tell you some of the brands and some of the good and some of the bad that comes when you do a loan. So make sure you just watch this full thing, watch it on even 2x speed if that's easier for you in the gear icon. But you'll want to know this because of the 300 brands that we have worked with, we've gotten $23 to $1 million a month. We've gotten even more than that to $500,000 a month. And every single time you get a Shopify loan, you need to consider what do you actually want before you sign that dotted line. Okay, so the first thing you need to know about Shopify loans, there's two main ways that they end up giving you that money. And it's very quick. The moment that they review your business, because you'll give access obviously to your Shopify account, they'll look at your gross sales, look at your seasonality, and it's very easy to get money from Shopify. It's actually very, very easy. But the problem is, depending on the health of your business, how you get your money, and the less seasonal your business is going to determine the rates. Now, I do want to make sure it's really clear. You can actually negotiate these rates, so don't just take whatever they say. No, negotiate it. It's a business. They can work with you. But typically what happens, 9 out of 10 brands, is what's happening is Shopify is taking a percentage from your gross sales. And that may sound really great, but I want to show you a P&L and talk you through what's happening literally right now as I make this video. We have one of our brands yet again has done a Shopify loan because they feel like they needed that money earlier this year. And I want to show you what it's doing to their P&L right now so you understand the reality of the situation. If you sign that dotted line, what's going to happen in the next 3 to 9 months. All right, so this is a real P&L of a brand. So every single brand that works with us, so my agency, we work with brands that want to scale aggressively. We're a performance company and a performance agency. What we do every time we work with brands, just so you understand the context, is we create a P&L, okay? The reason we do this P&L for every brand, we track alongside them, because we want to make sure, are you actually growing profitably? Are you tracking actually more net profit this month than you were making last month? What's really cool about this story, in this context, in this brand, we worked with them in the previous year. Okay, some things started happening and they started to leave, get a loan, and then they've since come back with us in the last couple of months. And so now we've seen the full P&L back when we work with them. Now we see their P&L now, and it tells an interesting story. So for context, these are the months that we were working with them. So they're doing great, record-breaking months. They actually did over $1 million in November, including the wholesale. And all we really care about right here is the net profit. Look at this net profit. Look how great that is. What a great freaking business, man. Very healthy, very profitable, fantastic. What happened is some issues happened and they decided to just take things in-house and they got a Shopify loan, mainly because they grew so fast over Q3 and Q4 in 2024 that they ended up needing to buy a crap ton of machinery, doing a bunch of stuff on the inside because they got so much demand for their business and their products that they got backordered for months on making the orders. They thought they needed to get a Shopify loan for funding to buy those machinery and to hire that staff. But look what happened. So what I've done is, and this is important for you, Shopify typically takes a percentage out of your gross sales. Now, why I'm showing this P&L to you is because this particular brand, 17% of their sales are being cut off and be taken for that loan because you have to repay it. And here's the first thing. Most Shopify loans, you have to repay within 18 months. Now, there may be some extreme circumstances where they allow you to extend that depending on the health of your business, but most loans, they expect you to pay back in 18 months. And so what that means is for this particular brand, 17% of all their gross sales is taken out for that brand. And what that does is this right here. So there's a new line called loan repayments. And so what happens? It goes down significantly. You can see the loans start happening. And what happens immediately? Well, you can see their net profit just starts getting cut down. And so loan repayments continue, 17% of all their gross sales happen. And what does this do? It creates a situation where they start to have a downward spiral. You can see it's going down and down. They had a good month in March, but then down and down and down and down. Why? Because you start to have a cash crunch, because 17% now of all of your cash is being taken away. And here's the thing, that happens on the net profit level too. And so what happens, you go from an insanely profitable business to one that's barely scraping by because you don't have the cash flow, because a big part of your money now is now going to loan repayments. Now, for this particular brand, on this trajectory, they're still gonna have 7 more months to pay this off. So they'll pay it off in 18 months. But what that means is the first thing you need to know is, out of all the businesses, and I've seen a lot, that have gotten a Shopify loan, 95% of them always go into a completely stall period in their business, meaning for 12 months or more, their business completely stalls because so much of their cash is being taken away to repay this loan. It creates a serious cash crunch for the next 12 to 16 months. And for this particular brand, which is sad, they grew so much last year that this year they're actually going to be down 40% in the previous year. And until they pay this off, they're not going to have a cash cow business again. It would have been way better off for them to stay the course, instead use better cash flow management and to buy those machines outright, because they had so much cash and they could have kept having so much cash. And that's what happened. So number one, before you do it, understand, do the calculation. So go back, look at your last 12 months and make an assumption saying, hey, now if 17% of my sales are now going to disappear, being taken away for this loan repayment, what is that going to do to my cash flow? What's that going to do to my balance sheet? What's that going to do to my net profit? So go and do that math first. This is a very easy P&L. Most of you guys can do this in Google Sheets or Excel, but make sure you do it because it is debilitating for most people I see take these loans. Now, there's another way that you can do this, and it's typically the healthier of your business. You could actually work with Shopify and they can give you a fixed rate. Now, it's not going to be a percentage, but it's going to be a fixed rate you have to pay every month or every week, depending on their cash cycle. But what's interesting about that choice is you're not going to have these massive spikes. But also on the downside is you're not going to have, because in the percentage of revenue model, if let's say you do 100K this month, and then the previous month you did 50K, we're only paying 17% off that 50K, but 17% off the 100K. Now that downside is I would much rather pay a fixed fee every single week than I would to pay those huge spikes, because when I really crush it in a month, I need that cash to now reinvest in more inventory. So if you're thinking about getting a Shopify loan, make sure you talk with them to see, do I qualify for a fixed amount? Because there's pros and cons to it, but personally, I'd much rather pay a fix because it's easier for me to forecast that, but it's also easier for me to scale out of that than in this situation where this brand, they're just in a death spiral every month since they took this loan. And the reason why is because they were already a profitable business, but they weren't like 30% profitable. That's just the downside about e-commerce brands. Very rarely do you have a brand making that. They are very cash intensive businesses, but fairly low margin, 15% net margins, 10% net margin is actually like the average for all e-commerce businesses. So if you're a 10% net margin business, but then now you get a loan and 17% on your gross is being taken out of, well, you're cooked, dude. Like you are literally cooked. And so you need to make sure you do this appropriately. It's extremely rare that I see any brand do a Shopify loan and them actually grow with it. Typically, it's brands who are already growing very aggressively, but specifically, it was brands who weren't relying on just meta ads to grow. And we'll come back to that in a second. Unless you are killing it organically or you have another channel that's working really well, that's not reliant on ads, I would not do a Shopify loan personally, because most brands, and I've seen so many brands take these loans, are ad reliant on 90% of all of their sales. And the problem with that is that when you take your gross sales and then you take 17% off top of that, and then you take your cost of acquisition off top of that, dude, you're making so little money to cover all the rest of your expenses. It is a bad deal. Like I've said, most brands I see take these Shopify loans, it completely stalls out their growth for 12 months until they pay this thing off. Unless for the few that have actually done this well, they had a different unlock from a different source where now they didn't have to spend as much to acquire a customer. So it can work if you're in a pinch, but those are typically the brands I see it work well and those that don't. And the other thing you should understand is like, go and talk to other founders. I am telling you what has worked for our brands that we worked with, because they take these loans out. And what happens is we go from having a really great scaling season and a really great aggressive new customer acquisition targets to being cut at the knees. Now, all of a sudden, I'm making this up, but let's say instead of needing a $60 CAC to keep scaling, now it's like $45. That's really hard to scale in that situation. And so make sure you understand the full understanding of what's happening. So for example, this is a real discussion from Reddit where a guy was talking about that he took out a Shopify loan. And he said the wheels came off. Facebook advertising, sales decreased, CAC rose. And how often does your CAC rise? And it became impossible to service both loans. I renegotiated both and I paid off 95% of it. And so that's why I see a lot of these brands happen is they get a loan off thinking very optimistically, like the best case scenario, which life rarely happens based off the best case scenario. What happens? CAC increases because they're so reliant on just one platform to get sales that when they get this loan, CAC increases. Now they're really underwater. And so what do? They get a second loan just to stay afloat, and the whole thing spirals. I'm literally dealing with that situation right now with one of our brands. The other thing you need to know is just how Shopify requires you to pay these back. And this is where it really screws people. Besides the gross sales and what that does to your P&L, what that does to your growth, which I think I've got that point across, the next part is they require you to pay it off in 18 months. But also, if you're not paying off a certain amount, partway through those 18 months, they start taking extra money out. Here's the fine print in the loan. You are required to repay in full within 18 months from the effective date in your agreement. And daily payments must meet a minimum of 30% of the total by 6 months. Let me pause here. That means if you're in that 18-month period, if you're at 6 months and by 6 months, you haven't paid off at least 30% of it, then they will start charging you fees. And by month 12, you have to have repaid at least 60% of it. Since the repayment is based on a percentage of your daily sales, you may end up paying more than the minimum payments, and your loan may be paid back earlier than 18 months. No refunds will be provided if daily payments exceed the minimum payments. So what that means is they will give you no refunds if you exceed minimum payments. If daily payments are less than the minimum payment, you may be required to pay the difference manually. What that means is they will take more out of your Shopify gross sales. So let's take a step back to make this very simple. The fine print, what people don't understand, and this is why I'm very cautious, don't take this loan unless it's the last resort. And by the end of this video, I'm gonna walk you through all the other better options you can do before you do this. Let's take a step back. You have a loan from Shopify, it's 18 months, okay? By month 6, if you haven't paid at least 30% of that loan off, so simple for rounding numbers, let's say you did a loan for 100 grand. If by month 6, you haven't repaid off $30,000 of that, they will start taking more out. So it's not just 17% of your gross sales. If you don't hit that 30% by month 6, they will start taking more out, which will further exaggerate your cash flow issues and further make you spiral more. For example, let's say you take this loan out, optimistically thinking and hoping and believing that you are going to do better than anticipated. This is like a godsend from Shopify that saved you. They have answered all your prayers. But then you go into a season where CAC is higher, things aren't working as well. And now it doesn't look like you're going to pay back that loan within the 18 months. So what does Shopify do? By month 6, if you haven't hit that 30%, they will start taking more out manually, which further makes you in a worse situation. Make sure you understand that. So it's not just taking the loan out, repaying it, the high gross sales, but also if you're not on track, they will take more out, and that is just going to completely wreck you. Also, make sure you know you're getting yourself into. This is from another user. When sales are down and you take a break, or maybe for a couple weeks that the sales aren't looking good, users of this loan, other founders have said that they will get an email from Shopify saying that you have created a bad act, and they may even shut down your entire business. I mean, sure, it's their money, you're using their platform, but just make sure you understand that they are not altruistic and the good guys either. Is that they run a business, which means if you get into a bad situation, they could actually remove your store, and then the chances of you paying it off are nearly zero. Just understand, while they also run a business, they're not the angels either, because they will do hard things to get their money back. And so if you are not repaying it, if you go through a period of time where you do not pay them, whether you pause your store, or you're not getting hardly any sales, they could shut down your store. So I'm saying this not to detract you. If that is like their last resort, which we'll talk about in a second, you may have to do it. Just understand your business may not be thriving like you hope it will by taking that loan. Instead, I want to walk you through for the rest of the video what you should do, in my opinion, instead. What I have seen to work well for our brands instead of a Shopify loan. What my CFO friend who works with over 20 different e-commerce brands, what he recommends instead of Shopify loans. Number one, use credit cards or a delayed payment cards before doing a Shopify loan. The reason why is I would much rather do a fixed payment than I would to do a big percentage. For example, there's really great credit cards out there like Parker HQ that allow you to do like 60 or 90-day terms. Again, we're all talking about bad situations where you don't have cash, you need cash. That creates a whole other set of problems. But if it's a short cash injection, that, for example, like inventory, a lot of people take out Shopify loans for inventory. That's probably the number one reason why people take out Shopify loans. If that is the reason, I would much rather put that on a card so that I have 60 days to then sell that, to buy that inventory, get the inventory, and then sell it and repay back that card than I would to get a Shopify loan that's going to screw me for 18 months. Another great thing you can do is use your suppliers as a bank. If you're doing any amount of gross volume that is respectable, like $100,000 a month plus, typically suppliers now have worked with you for some amount of time. They feel like they can trust you. You pay them a lot of money. You can use them to get better terms. For example, ask them for, hey, I need 30-day terms. I need 45-day terms. I need 60-day terms because I need to get this inventory and sell it. And you can do that because remember, they need you too. They don't want the good times to stop rolling. They understand that. They may want you to put like a down payment down, which is way better than paying for the whole thing, but that actually works. A lot of people do that, especially if you want to like double these up. You could get your supplier to do that. Then when the bill comes due, if you want to use like a card like Parker HQ, which has like 60 and 90-day terms for e-commerce brands, you could theoretically buy inventory, not pay for it for 4 or 5 months, have already sold out of it, and you start the whole process over again. E-commerce businesses are a very capital intensive business. You have to think in ways like this to manage your cash flow appropriately. The other thing that I would do before I got a Shopify loan, I would get an investor, because if your brand is halfway decent, that is very attractive to an investor. I would much rather get an investor, give away a piece of my business than I would get a Shopify loan, because of all the people I mentioned, a large majority of them go out of business after they get a Shopify loan, from my experience. Or they get in such a bad position that they end up having to sell the business in like a fire sale because they can't get out of it anyways. So for me personally, I would get an investor before I got a Shopify loan. The other one is if you've been in business for 2 years plus, get an SBA loan, a small business loan. Those are far greater, far more attractive than a Shopify loan. Most people get a Shopify loan because it's fast. You can get the money very, very quickly. But SBA, it takes longer. You have more hoops to jump through. But the cash flow management is much easier because it'll be a fixed amount paid every single month. And that's way better for your cash flow than it is for the 70%, 90% taken out of your gross sales. The other, in my opinion, far more attractive option is like, I would consider even taking a second mortgage on my house. And by the way, none of this is financial advice. I'm just telling you from like a P&L perspective, what is much easier from my cash flow than a Shopify loan. A Shopify loan, while it seems like a great idea, it cuts your business at its knees. It's very hard to manage your business during that time. From my experience and the brands I worked with, getting a second mortgage on your house, for me personally, while I'm taking that risk, the benefit is it's a fixed amount over a very, very long period of time. That to me is way better for my cash flow and for me to scale my business through in that situation than it is for me to get a Shopify loan that I'm trying to scale this business. I'm trying to make my life better. I'm trying to make more money. But now because I took this Shopify loan, I can't because 17% of my sales every single day are being taken out by Shopify. Like it's like trying to grow, but now you have like 1,000 pounds you have to drag behind you. It's very difficult. Now, if you feel like you have to get a loan because none of those options are available to you, make sure you understand these details. Number one, you can negotiate with Shopify and you can get that percentage down to 10% or less. Now, that is reserved for the least risky businesses. Typically, they have very good cash flow. Typically, they have very unseasonal businesses. Typically, they're in a good niche, a good industry. It looks like that you have good margins overall. So make sure you negotiate. Never take what they say as face value. always try to get a better deal. And I do know brands that have gotten under 10%. And for some businesses, you can swallow that. You can swallow less than 10%. I've even heard of a business getting 6%. You can stomach that and still grow your business. But over 10% is just like very, very difficult. The other one is you got to be at 70% margins plus. I've already shown you the P&L. And that brand already was at 70% plus margins, and you already saw what it did to their P&L and what it did to their net profit just by adding that loan repayment. You've got to have very good freaking margins. If you don't, you are cooked. And with the negotiation, negotiate the percentage fee, but also negotiate a fixed fee. A fixed fee in a commerce business is way better than a variable cost that every time you do a really great month, and actually nothing changes because that 70% is also going against you. So for me personally, I would much rather have a fixed fee because that's way better for my cash flow and my planning and my forecasting than the percentage. All right, so before you get a Shopify loan, please consider the things I've shown in this video. My selfish desire is that for you guys to all grow and be wildly wealthy, but I rarely, extremely rarely see a brand take a Shopify loan and they get very wealthy until they pay it off. Like it cuts them off at the knees. I am very against Shopify loans for that reason. I would try all those other options first before I got the Shopify loan. I understand every business is different. There may be extreme outliers in this situation. So I did my best to cover a wide variety of situations that I have seen and circumstances I have seen for the brands that actually got through it on the other side. So if you have any questions, put a comment down below. I would love to help you out. And I really hope you find a different solution than a Shopify loan.